Hi everybody, Sarah Iani with AOA Commercial Brokerage. Apartment Owners Association is what the AOA stands for. Our main office is located here in Van Nuys, California, which is in the San Fernando Valley. We do have offices all throughout California, so we're all the way from San Diego to Alameda. Anything for apartment owners, property managers, housing providers, we can take care of you. We have all the departments that you need. We have credit checks departments. We have the forms department. Forms meaning we have residential leases, the applications, like I said, the credit checks, so then that's the applications. We have the 3-day notices, all those forms that you need. We have those available to our members for free. If you're not a member, there's a small fee. We have seminars, educational seminars to keep all these housing providers updated on the most recent laws. We're here to make the housing providers' lives easier so that the tenants' lives can be easier so that everything can just kind of flow. Everyone needs somewhere to live, right? So we are here for the housing providers. We cater to apartment owners, and that's what we do. So today we are going to talk about 1031 tax exchanges. So this is to defer capital gains. A 1031 tax exchange will defer your capital gain. What is a capital gain? Really quickly, and first and foremost, let me just say, if you are ever thinking of doing a 1031 tax exchange, contact your CPA, contact your accountant, contact an accommodator. That's the ones who do the 1031 tax exchanges. I am a realtor. I can get the building sold. I can get the building bought. That's what I can do. I can get you the market value. I can do all that. When it comes to taxes, I'm a real estate agent, so you need a CPA, you need your accountant. I am familiar with 1031 tax exchanges because they happen all the time in real estate. So what is a capital gain? A capital gain is the gain that you get from your asset. You bought a house back in, or an apartment, a duplex, land, any kind of investment property you bought 10 years ago. You bought something for $250,000, $300,000, whatever the price is. Now it's worth, say, 200,000 more. So if you bought a house for 300,000, now it's worth 500,000. You have gained a $200,000 capital gains, right? You have to pay taxes on that. So that's a lot of money because here in California, we are the highest taxed state. Isn't that lovely? So you have to pay taxes on that. That might not be an incentive to sell or to maybe get out of what you're into, that asset. Maybe that apartment is not working for you anymore. Maybe you're done with owning in California. You want to go elsewhere, but you don't want to sell because you don't want to pay all that gain because that's a lot of money. You can defer those capital gains by doing a 1031 tax exchange. And what that is you're going to exchange into a like-kind property. Like-kind property means, according to the IRS, it's kind of anything with the intent to investment property. So like I said, you can exchange if you have land with the intent to build on it for an investment property, you can exchange land to land, or you can exchange land to a duplex, to a triplex, to an apartment, because your intent is to do income property. Pretty simple, right? So you just want to keep deferring those capital gains. You don't want to pay that. You want to just keep being a housing provider. You want to keep being an investor. That's great. Thankfully, we have 1031 tax exchanges that make that possible. So what you're going to do is you're going to sell the relinquished property. The relinquished property is the one that you own right now, and then you're going to get rid of it for the replacement property. That replacement property is called replacement property because that's where you're replacing your capital gains taxes to. That's just it kind of in a nutshell. There's a lot of little ins and outs. So the next video we'll go on to some verbiage that we need and the time periods, because you don't have all year to do this. the IRS was so kind to give us this option. They've been trying to take it out, you know, year after year, but we still have the 1031 tax exchange, thank goodness. But we do have time periods. We have a identification time period. We have an exchange period, and those are all very strict, and we have to meet those time periods. So you need, if you're going to do a 1031 tax exchange, you need to make sure that your agent knows what you're doing. Everybody in the party knows what you're doing so that you are best protected. And it's totally possible. It happens all the time. This is a great asset for investors. So we do encourage 1031 tax exchanges. Super helpful for if you're buying not in your market. You're going to sell in your market. Most of the time, a market is not a buyer and a seller's market at the same time, right? So if you're selling at a great time and it's a seller's market, well, guess what? Now you're a buyer. And so now you have to be buying in that same market. You might want to go out of state. You might want to invest in something else, and there are options to do that. So we're just here trying to make investors' lives easier. If you have any questions about this, I'll be back again next week with another video going a little bit more into the time periods and the time frames, because those are very important to know. Trying to keep this video short and sweet. So thank you for watching. Sarah Iani, AOA Commercial Brokerage. Have a great week, everybody, and we'll see you on the next one.